Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deal hopes dim. Oil holds its rally as Trump makes sweeping new demands on Iran. The hardened standoff clouds a Hormuz deal. The AI boom has companies splashing and dashing for cash. Nvidia taps Wall Street for $500 billion. Intel is raising $20 billion. And Anthropic is spending $9 billion to secure computing power. And coming up, we will speak to Middle East grocery chain operator Spinneys and Kuwait's upstream oil company AEC about how the conflict is affecting businesses across the Gulf. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Amr in Dubai. Well, you just heard it. We have a lot to get through for the show. Geopolitics, businesses, the impact of the war on businesses. But before we get into all of that, let's do a quick markets check, starting with U.S. futures. Not doing a lot today. 0.1% higher. The MSCI Asia Pacific 0.2% higher. Some things that happened in the S&P or in U.S. Trading hours yesterday. We know that the S&P 500 closed flat. Now, some of the geopolitical headlines were starting to weigh on the overall gauge. We also saw NASDAQ falling slightly. The SOX index also falling about 2.7%, wiping out some of the gains that we saw in the session earlier. I mentioned Intel. There's a lot of individual stories happening in individual stocks. One of them is Nvidia looking to source $500 billion in financing for AI infrastructure. It's tapped some of the biggest investment firms in the world: Apollo, Blackstone, BlackRock, Goldman Sachs, KKR as well. We're also noting this story from Morgan Stanley that is seeking to facilitate about $1.5 trillion of investment activity that is tied to the United States push for innovation and infrastructure and what is needed to bolster it, essentially. We're also keeping an eye on markets in Asia, namely Japan. This morning is closed, and that is why you're seeing we have gold and not treasuries this morning, because they're not trading in the early Asia hours this morning because of that closure in Japan. So you're seeing gold prices and 4,420 thousand an ounce. So you're seeing that increase in gold over the past couple of weeks, really. And of course, Brent crude prices are dropping slightly, moderating from moves we've seen over the past 4 days. The 4-day rally that has led Brent crude prices to rise about 10%. We still have no deal. We still have tit for tat conversations happening between Iran and the United States, but we will unpack all of that momentarily. But for a deep dive into what is happening in Asian markets across the board, we've got Winnie Su standing in Hong Kong for us. Winnie, what do you have for us?
Yeah, good morning, Abir. Well, we are seeing Asian stocks fluctuating quite a bit today. A bit of a cautious mood with that higher oil prices and perhaps also ahead of the CPI numbers tomorrow. However, when it comes to Australian stocks, we're seeing stocks edging higher just a bit ahead of the RBA rate decision that we will have later in the hour. Now, when it comes to expectation for now, it is a hold, especially with the softer labor market and also that housing downturn. However, still expect the central bank to remain a hawkish tone given the inflation outlook. Now, when it comes to Kospi and Taiwanese stocks, we are actually still seeing a bit of a green, and that is most likely driven by how the Intel and also Nvidia coming to market for more funding perhaps will drive more money also into the AI supply chain in Asia. Now, flipping forward, we take a look at where the Japanese yen is trading, because we did see that weakening by about 1% overnight, and we are seeing the Japanese yen today stabilizing still below that 160 level against the dollar, but at this point pretty much having already erased half of those gains since that joint intervention. And investors are still quite bearish given the US and Japan rate differentials, and they are saying that without another forceful joint intervention plus the Bank of Japan's hawkish move, the yen is most likely going to extend that weakness further. Back to you, Abir.
All right, Bloomberg's Winnie Su in Hong Kong with the latest, especially on that yen story. Now, returning to the geopolitics in the Middle East, oil is holding on to gains after President Trump made sweeping new demands of Iran. Trump is calling for Tehran to pay compensation for damage and debts caused in conflicts across the Middle East. The demands come in response to Tehran's requests for reparations over the U.S.-Israeli war on Iran. For more on this developing story, we're now joined by Onur and Bloomberg's managing editor for the Middle East and North Africa from Turkey this time around. Onur, good to have you with us. The latest, what do we know about the tit-for-tat sort of remarks between Iran and the United States?
Well, Abir, as just mentioned, Trump has come up with this new list of demands, which basically center around his demand for reparations from Iran. This was, on the face of it, in response to repeated remarks by various Iranian officials that the Islamic Republic is seeking reparations for war damages from the U.S. For the deal to reopen the Hormuz Strait to materialize, even before talks with the U.S. and others on more contentious issues, such as a nuclear file, can even begin. Now, Trump's frustration, he says, comes from the fact that these demands were never made as part of the official negotiations, but instead informally floated by Iranian officials, which he said was the reason why he's now seeking reparations from Iran in response. On the other hand, it also shows frustration building up in Washington, D.C. Just the other day, President Trump had said that he was going to let the economic pressure to do the work, so to speak, and basically undermine the Iranian government. But it shows that his frustration is growing because his tone is changing every day.
So given that tone change, Onur, how realistic are we? How far are we from a deal to reopen the Strait of Hormuz? Because it does feel like we're getting further away from this every single day with those remarks from either side, really.
Well, these surely will imperil the diplomatic channel, whatever shape it really is in at the moment. We know that Iran and Oman were talking, and the main reason is because these demands will almost certainly be rejected by the Iranian government. It will not be even taken seriously, and yes, it will further prolong the process. Just to remind our viewers, this preliminary deal on the reopening of Hormuz was expected to be finalized just about a week ago. At least that was the expectations for American officials. A week on, it still hasn't. And with the kind of comments that we're seeing out of Washington, D.C., it's hard to expect an imminent breakthrough to reopen the strait.
All right, Onur, and following that story for us, Bloomberg's managing editor for the Middle East and North Africa. Now, let's focus in on markets. Government bonds in Asia are following treasuries lower as oil's four-day rally revives inflation concerns. This comes ahead of key U.S. consumer price data due on Wednesday. So joining us now is Wealthbrix Capital Partners CIO Anita Krishna Gupta to discuss these market moves and everything that's happening. I was talking about bonds, Anita, and the yield curve tells us an interesting story. The front end is telling us a different story about what the Federal Reserve will do than the longer end. What is the impact of that?
Good morning, Abir, and I think you already said it all. You've talked about the debt raising in AI, you've talked about, the money being raised, you've talked about oil. So coming to, where we are in terms of what's happening with U.S. government treasuries, how the market is pricing that in. So after the last Fed meeting and, Chairman Wash spoke about it, the fact that he's, they're watching data, but he's not giving out as much of an opinion as to where he sees rates. He wants to make it, a little bit more obscure in terms of, markets trying to, understand what the Fed is doing and being more explicit about it. He doesn't want to be that explicit. Yeah. So when we're looking at after he spoke and then, we saw a little bit of, yields rose both at the short end and the long end. And now you've still got about a gap of about 46 basis points, the 2 and 10 year. You've got a bit of bear steepening that's continuing to happen. Now, markets reacted on Wednesday and Thursday. You saw the S&P 500, which was falling. But on Friday, we have seen that, after we saw the jobs report, again, we saw a little bit of tick down in yields, and immediately you saw a spike in the S&P 500. So markets are being very, very reactive to where yields are. Yeah. And both now, if you're looking at the long end of the curve, you're looking at 30-year Treasury yields, which are above 5.3%. You're looking at the impact on that on mortgage rates, on borrowing rates, it's definitely going to impact the U.S. consumer.
So that the U.S. consumer, but also what we're seeing in the S&P 500, and you mentioned that, is it's at record highs right now. We're seeing that, but how long will that be the case until valuations come under pressure from that 10-year yield range?
Okay, so that means companies are borrowing higher, right? The second your 10-year treasury goes up and it's, trading, it's been going up the whole year practically because of oil prices causing inflation. And when we're looking at the impact, there's a big wealth impact today in the U.S., which is continuing. A lot of U.S. money is in equities, so equity markets are up, so that wealth effect stays. But that's, again, of course, in about the top one-third of the population. Then also what we're looking at is the valuations, which you just talked about. Now, 18.8 times forward PE for the S&P is a little bit above the 5-year, but not above the 10-year valuation range.
Okay.
So you've got earnings that just came in for Q2, and if you take out Amazon and, Microsoft, if you take out their one-time, the valuation gains from Alphabet, if you take that out, you've got a 32% earnings growth year in year for Q2.
Okay. What about the geopolitics? How do you price that in with every day those headlines that we're seeing? How does that factor in?
So the very surprising thing is that so far the U.S. market has ignored the geopolitics except for the oil price. So they're not looking at the cost of the conflict yet. That hasn't seemed to be factored into U.S. government budgets or the impact on spending. It will come through.
Okay. What about the AI concentration that we're seeing in the market? It does feel like the AI-led rally is synonymous with the bull market that we're seeing in the U.S. How long do you think that's going to be the case?
Oh, that's not going away. It's just that different parts of that AI bucket are going to perform or not perform. So what's performed more recently is anything related to cloud services. So the companies, again, Alphabet, Microsoft, Amazon, again, came out with cloud revenue growth at 40% year on year. Now, that's a big number. So monetization effects are coming through. It's also more visible, the path. You've got Amazon's CEO talking about the fact that, it's a 5-year cycle in terms of cloud companies sign up. Now, that's different to world models in, what's happening in some of the other companies, whether it's Anthropic or, ChatGPT. They're building up, but that's not as easily monetized.
Yeah, of course. And, a very, very fast developing theme that we're witnessing in the market. Anita, thank you, as always, for your insights. Anita, Krishna Gupta, CIO at Wealthbrix Capital Partners. Now, coming up, Nvidia partners with a group of U.S. investment giants to source $500 billion in AI infrastructure financing. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Nvidia has teamed up with some of Wall Street's biggest firms to unlock up to $500 billion for AI infrastructure. The initiative will provide financing for Nvidia customers building data centers, power projects, and advanced chips. To discuss more on this story, Bloomberg senior editor Balazs Pens joins us now from Hong Kong. Balazs, good morning. This deal, will it reassure or concern investors when it comes to the wider AI funding picture?
Well, it's certainly a very important moment. Nvidia called it an inflection point for the AI build-out. The backdrop is, of course, the vast amounts of money needed to continue this build-out of AI infrastructure for these AI factories, as Jensen Huang likes to call them, the amount of money that needs to be raised via different venues, different methods to finance this build-out. Now, one of the concerns, especially when it comes to Nvidia, has been around circular financing, where Nvidia invests in companies which then buys its own products, and that's some people are concerned that inflates valuations, that inflates numbers, and the concern is that if there is a sudden drop in AI demand, that would unravel some of these deals. What this latest deal, where the biggest Wall Street financing companies and banks, investors are involved, Apollo, BlackRock, Blackstone, Goldman Sachs is there, KKR, etc. What it does is it helps mobilize third-party financing. So it creates a pool of about $500 billion for potential investments, which will be decided on a case-by-case basis, and no deals have been signed yet. But what this does is it removes some of that concern about the circle of financing and shows Wall Street's commitment to the AI build-out and Nvidia in particular.
And Balazs, we've also reported earlier that Intel is seeking to increase the amount it's raising in a share sale to about $20 billion. Now, that is a third of the amount more than it was targeting. And it's also been trying to clean up its financing recently. Is that a successful feat?
Well, this fundraise is certainly going to help, and it just shows the demand, the amount of enthusiasm for these deals. As we have seen in many other cases, a lot of these companies in the field, chip makers from Hynix on down, raising tremendous amounts of money. What this does is it helps Intel capitalize on that surge in the share price, over 400% over the past 12 months. It helps the company capitalize on that and bring in extra funds to help its own financing needs. So it does help with the funding and does help clean up the financing. And we heard that there's $100 billion worth of demands. So that just shows how enthusiastic investors still are for this kind of investment.
All right, Bloomberg's Balazs Penn's keeping up with that story for us. Now, Mark Zuckerberg has published a 6,500-word essay on AI, emphasizing his belief that wider access to AI models is key to the industry's future. Meta CEO says he still supports open-source AI and challenges the notion that concentration of power in a few companies can ensure safety. This comes as the company introduces a downloadable AI model that can run on a personal computer.
It's a 30 billion parameter dense model that runs on your laptop, and it's the highest performing model of its size. In the coming weeks, we are also going to open the weights for MuseSpark 1.2, our latest foundation model and one of the leading models in the world. And we've got even bigger models that are coming soon too.
And shares of Riot Platforms surged in late trading after Bloomberg learned the company has signed a long-term deal with Anthropic to provide computing capacity for the Claude maker's AI services. The agreement is running through 2048 and is expected to generate more than $9 billion in revenue for Riot. Now, coming up, Japan's growth strategy minister tells Bloomberg that the government's spending plans will provide a long-term boost for the yen. Our exclusive interview is up next. This is Bloomberg. Japan's growth strategy minister says government spending plans will provide a long-term boost for the yen. Speaking exclusively to us in Tokyo, Minoru Kiuchi also pushed back against the market concerns over the nation's finances. Take a listen.
I think I would like to stress the fact that this does not represent a retreat from fiscal discipline, and we are shifting from the rather, abstract concept of fiscal consolidation towards a framework that places greater emphasis on the more economically grounded and international standard concepts of fiscal sustainability and debt sustainability.
All of the spending right now that's expected, including the consumption tax cut, for example, that's raising concerns. Which tools does the government have available and funding alternatives if you're not going to borrow more?
We review both revenue and expenditures, and we also review, as I told you, some fundings and special taxation measures. Through this, I think it's not so difficult to secure 5 trillion yen.
Is fiscal policy right now in Japan, which is seen as very expansionary, going to be able to achieve that goal?
Japanese fiscal policy is not so expansionary as you think, because we put great importance on fiscal sustainability. So it's, some people say that Japanese fiscal policy is very expansionary, but it is not true. We will stick to the fiscal sustainability. And as Prime Minister Takaichi stressed, the fact that she, regarding the consumption tax reduction on food and non-alcoholic beverage, she won't issue a new JGBs. So I think there are some misunderstanding.
If the BOJ hikes rates and the yen still weakens, how problematic will this be for the government? And could you reconsider perhaps some of the fiscal plans, which right now are thought to perhaps be destabilizing investors and market sentiment towards Japan?
I would like to stress the fact that Japan's fiscal position is improving. Responsible and proactive public finances is a policy aimed at strengthening Japan's supply capacity and productivity while attracting greater investment into Japan. As investment in Japan and yen-denominated assets increases, demand for the yen will naturally rise, as I mentioned. I therefore do not see responsible and proactive public finances as a policy that leads to a weaker yen. And on the contrary, I believe it can put upward pressure on the yen. Lastly, our aim is to achieve both a strong economy and fiscal sustainability in an integrated manner. Please believe me. That is the essence of responsible and proactive public finances and the core of this historic shift.
That was Japan's growth strategy minister speaking exclusively to Bloomberg. Gautam Adani has won dismissal of U.S. fraud charges tied to allegations of a $250 million bribery scheme for solar contracts in India. A U.S. judge dismissed conspiracy securities and wire fraud charges against Adani and his nephew, Sagar Adani, preventing the government from bringing the case again. The ruling marks the end of Adani's U.S. legal troubles. And China has ordered anti-dumping deposits on pecan imports from the U.S. and Mexico. Starting Tuesday, importers of U.S. nuts will have to pay a deposit rate of 54%, while those buying from Mexico face rates of at least 18%. Beijing earlier said pecans from both countries were being sold in China at unfairly low prices, and the decision comes as officials prepare for Xi Jinping's planned visit to the U.S. next month. Now, coming up, we will talk to the vice chairman of Kuwait's Action Energy Company as oilfield services firm nearly doubles profit in the war. That's next. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Deal hopes dim. Oil holds its rally as Trump makes sweeping new demands on Iran. The hardened standoff is clouding a Hormuz deal. The AI boom has companies splashing and dashing for cash. Nvidia taps Wall Street for $500 billion. And Intel is raising $20 billion, and Anthropic is spending $9 billion to secure computing power. And coming up, we will speak to Middle East grocery chain operator Spinneys and Kuwait's upstream oil company AEC about how the conflict is affecting businesses across the Gulf. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Before we get into where markets are, just a quick look at the RBA decision just now, leaving the cash rate target at 4.35%. The estimate was 4.35%. So in line with the estimate, the decision just out now from the Reserve Bank of Australia. The 10-year yields have risen back above 5% today. That is something that we had reported earlier. A key level to watch is 5.09%. That is a rise above that would take them to the highest level since May. But that decision, again, in line with estimates in Australia. Now back to our regular markets check, taking a look at U.S. futures this morning, 0.2% higher, a little bit higher than at the top of the show when we were looking at them. Asian equity is also a little bit higher, 0.2 higher, 0.23%. Now, in the United States, there are individual names with interesting individual stories that we had kept an eye on. We had reported on Intel, speaking to Balaj earlier in the show, about what Intel was planning on doing. This is a Bloomberg scoop that we reported. Intel is seeking to increase the amount it is raising in a share sale to about $20 billion. That's a third more than what it was planning when it announced the deal early on Monday morning. We're also taking a look at Nvidia, tapping the market for $500 billion, a whopping amount, and tapping into some of the world's largest investment companies, including Blackstone, BlackRock, Apollo, KKR, and Goldman Sachs, among others. And then Asian equities, we're keeping an eye on the market there. Japan is closed today for a public holiday. Brent crude prices 0.2 lower this morning. The tit-for-tat conversation still happening between Iran and the United States. President Trump, the latest from him is him saying that if Iran is going to ask for compensation, the U.S. is going to ask for compensation for the thousands killed by Iran. So we continue to monitor that escalation in the Middle East. Treasuries this morning closed in early Asia trading because of that Japan holiday. So we're keeping an eye on gold prices above $4,400 an ounce as of now. It's had a massive rally over the past few days. But when treasuries open later today, of course, we're going to be keeping an eye on the yield, which had gained yesterday about 6 basis points, or early in the previous session. Again, attention will be shifting towards those CPI numbers coming out of the United States tomorrow, and what that would mean for the Fed. Yet again, keeping an eye on the Fed moves. But for wider moves in Asia this morning, we've got Winnie Su standing on Hong Kong for us again this morning. Winnie, what do you have for us?
Yeah, morning, Abir. As you just mentioned, we are really seeing Asian stocks fluctuating quite a bit ahead of that CPI number tomorrow. Now, when you look at Hong Kong stocks, in fact, it is quite a bit of a drag today, down more than 1%. We also have Tencent's earnings tomorrow. So a bit of caution on that front, as well, as investors want to see that AI monetization really coming through. But interestingly, you can see that as a contrast, we are seeing a bit more strength when it comes to the tech stocks in onshore China, and we actually saw a very strong retail sentiment and retail investors flooding into this upcoming IPO from Unitree Robotics, and we saw that the IPO is in fact oversubscribed by more than 5,500 times, and that is most likely going to make this IPO the very first Chinese humanoid robot listed company in onshore China, and that is why it's gaining so much attention, especially amid this tech race between China and the U.S. Now, when it comes to cross-asset-wise, we're looking at the Japanese yen stabilizing around that 159 level against the dollar, having weakened by about 1% overnight. So really lots of weakness there, as we have seen it already pretty much erased half of the gains since that joint intervention. Now, flip aboard, a quick look at the macro side of things, because we just talked about all these impact from that elevated oil prices, and you can see that because of that, really a lot of concerns when it comes to the inflation outlook weighing on Asia's bonds, including the ones in Australia and New Zealand, as well as driving oil-related names in Asia higher as well. Back to you, Abir.
All right, Bloomberg's Winnie Su in Hong Kong with her markets update. Now, returning to the region, Kuwait's Action Energy Company has nearly doubled its first half net profit to over $14 million. That is despite higher supply chain costs from the Middle East conflicts. The drilling and oil services company says it has an order backlog of more than $1 billion. So to discuss all of this, we're now joined by Rawaf Bourisli, Vice Chairman of Action Energy Company. Rav, good to have you with us. Good morning. just talking about the earnings a little bit
Good morning.
and about the activity in your company and wider companies in the Middle East. Drilling and services activity in the Middle East and in your facilities, has that returned to semi-normal levels?
Good morning, Abir. Actually, that is very fundamental for us right now. The drilling and the oilfield services have not witnessed any stop from our end. And that's shown very clearly in our half-yearly results, where we were able actually to double our net profit from last year. Same to the revenue, there's an increase about 34%, where we have recorded 58.5 million USD in revenue. So there has been an effect. However, the main effect was on the supply chain and logistics. And of course, that's given with the current situation, we have seen or we have witnessed an increased costs in regard to shipping, in regard to logistics. But thankfully, we have been able to mitigate that.
So looking forward to supply chains disruptions going forward now with the conflict still going on, how do you factor that in your numbers?
Well, we can't speculate more, I believe, on the situation, but we have taken substantial provisions in our estimation for the next half of the year and even for 2027 to take into account the increasing cost of the logistics and the supply chain.
So in terms of the services, Rawaf, that you provide to Kuwait oil fields, can you talk to us a little bit more in detail about what those are and if they have been affected at all, if there is a pickup in those services at all?
Yeah, well, as a company, we're a local champion in terms of drilling and oilfield services. We serve the two pillars of the upstream sector in the country. We're actively now operating about 15 or 14% of the rigs, onshore rigs in Kuwait. We have 20 rigs in operation at 100% utilization, and we have 7 more coming in toward the end of this year, at the beginning of 2027. In terms of oilfield services, we specialize and focus on added value oilfield services that is integrated with our drilling operations. We anticipate that out of our 1.1 billion backlog, about 38% is connected to the oilfield services, which we believe will contribute heavily in end of this year and 2027.
Okay, and then in terms of the feedback that you're getting from Kuwait Oil Company, what are they telling you about the look ahead for drilling over the coming months or over the coming half of the year, especially with Kuwait having been one of the countries majorly affected by the war here in the Middle East?
I believe the National Oil Company of Kuwait, Kiuchi, has done a great job actually in securing. First of all, I praise them for actually the safety and the concern that they have shown for the staff and the management overall. As far as the outlook, I believe most of NOCs, if not all of NOCs, work on a long-term plans. And these long-term plans span from 5 to 7 years. Of course, Kuwait Oil Company has an ambitious plan to reach 4 million barrels by 2030. And we have not witnessed any change in regard to the plan that has been set before the disruption.
All right, Rawaf, thank you so much for your time this morning. Rawaf Bourisli, Vice Chairman of Action Energy Company, on the latest earnings. Now, coming up, we will talk to Sunil Kumar, CEO of Spinneys, after the Dubai-listed retailer warned that conflict in the Middle East is disrupting key shipping corridors. That is coming up next. This is Bloomberg. Dubai-listed Spinneys reported profit for the second quarter of 90.6 million dirhams. The retailer says revenue dipped slightly, hit by regional geopolitical tensions that disrupted supply chains and cut store footfall. So joining us now to discuss this is Sunil Kumar, CEO of Spinneys. Sunil, good to have you with us this morning.
Thank you very much for having me.
Earnings came out this morning, a slight miss on the second quarter profit year on year. Can you talk to us a little bit in detail about the impact of those supply chain disruptions as a result of the war?
I should say, since I was appointed as a CEO, this may be the second quarter I have faced the great challenges. Not in terms of the brand equity and the value, but the supply chain disruptions. Always remember supermarkets, particularly we are a business running on fresh food. 65% of our business is fresh food. And our first important thing to do is to ensure that we have an availability for the product in the shelf when the customer comes in. And in the month of April, great disruption, whether it is a sea, air, or road, we had a great disruptions, but managed to overcome those disruptions through our buying offices across the world, as well as our production units in UAE.
Okay, but how much of the cost did you have to take on to the customers? And then how do you square between pushing that cost to customers and then maintaining your market share?
So I should give you some factors, and I wanted to dissect that factors. Now, prior to April, January, February, March, a sea freight was $3,000 from Europe or in UK. On the month of April, it moved into almost $17,000. And in US, it was almost 4,680 prior to April, and it moved into $24,000. Now, at the given time, though it has been mitigated much better way, still it is on. If I wanted to take anything from UK or Europe, it could still cost us $7,000.
Okay.
As well as in American, it is almost $17,000. So cost of goods to bring from abroad has gone up drastically.
Okay, and then when it comes to the environment, everything that has happened, your markets, your big two markets are the UAE, Saudi Arabia. Who was suffering the most in terms of footfall? Because you mentioned footfall in your earnings having dropped. So what was the country that was hit most in terms of that?
We have 4 formats. One is a business-based format, which is a meal solution. And the other one is tourism-based malls.
Okay.
And we have a neighborhood store. So we have an equal distribution of the formats. And therefore, the neighborhood stores were doing good. But two formats which was hit hard because of the tourism on the malls as well as the business locations. But how we mitigated this, so still if you are looking at the customer footfall, it is much better than what we saw it in the April. And the May was average, but June came back with a double-digit growth, in fact. So we are happy that the region has shown the confidence in the business, and we have seen that footprint increase as well as the basket. That's why we managed to get a 5.1% growth on revenue.
So it could have been much worse is kind of the consensus here. But looking ahead over the next 18 months or so, what is your outlook on particularly food inflation? Because that's been a very widely discussed topic, at least here in the UAE or in the region.
Still, the cost of supply chain is still high, as I mentioned. And I think that it will go away when the disruption and everybody is clear and everything becomes normal. But now customers and all the businesses are living with the cost inflation, and it has more or less customers has accepted. That's why we have seen the growth in the month of June, and thereafter it is better growth. We have seen the last month also a better growth than what we anticipated. So customer has anticipated. How we have overcame that cost inflation, we decided strategically that 500 SKUs we will not touch because that's a very price-conscious, price-sensitive SKUs. And we didn't do any cost inflation, though there are cost inflation. For example, a coffee, when you go and buy a coffee from Spinneys, it is still 10 dirhams.
Okay.
And the chicken, roast chicken, when you buy as a whole bird, is 22.50. Still,
Okay.
we haven't touched that price.
So your market share has survived.
Survived, and customers have shown a great confidence on the brand because of the availability. The product we never treated because it is expensive to bring, but we still managed to bring those products on shelf.
Okay, and just briefly, Sunil, over the next few months or over the next few years, your expansionary sort of outlook for the region, what are countries that you're considering expanding into?
Still, we are going ahead with the expansion plan because we have a great confidence on this region. Saudi, we have already 4 stores, and we are looking for 2 more stores, either end of this year or the first quarter of 2027. We are moving to Philippines. We will be opening our first 2 stores in end of December or in January. And we are looking at Kuwait. Kuwait, we're supposed to have opened the stores by end of December, but unfortunately that may move into January or February 2027. So we have a great confidence in this region. Our strategic approach is to expand Spinneys as a brand, as a premium segment, to expand into a GCC countries, because we are a Middle Eastern brand, and we wanted to ensure that the Middle East brand will survive and enrich ourselves for the customers in a better way.
Okay, so the war hasn't impacted those long-term visions that you have?
Yeah, it hasn't affected, and it is a current situation. It has an impact on the cost and RSP, but long-term, we are very confident, and it will work better for this region as a brand.
All right, so now we're going to have to leave it there, but thank you for coming in to the studio this morning, Sunil Kumar, CEO of Spinneys. Now, coming up, the lack of a deal to reopen the Strait of Hormuz sends oil prices up. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. A rally in oil prices left stocks wavering while bond yields climbed, with trader anxiety building just days ahead of key U.S. inflation reports. With us now to discuss all of this and wider market moves is Bloomberg Markets Today editor Sam Unstead. Sam, good morning. A question about fairness. Is it fair to say that these oil prices show that markets are worried about a lack of progress towards the reopening of the Strait of Hormuz?
Well, I think it definitely indicates that they're worried about that in terms of oil prices. So you've got the big move in oil. That hasn't gone out as far as you might have expected it to. There was quite a significant move in Brent and in WTI yesterday. So a whole kind of couple of dollars up on both. It fed a little bit into US stocks, although overall relatively resilient in comparison to what we've seen previously. Worth remembering, of course, we're in the summer months, and so the amount of liquidity in the market is a little bit lower. And also, we're at this point now where there's quite a lot of fatigue for traders going back and forth about Iran and the US and whether a deal might be coming and whether it's not, and whether the talks are coming. And at this portion of the year, things kind of move on to focusing on other things. But it's certainly still there, and it's certainly creating quite a bit of inflation anxiety, as you kind of alluded to.
And Sam, the yen has also been in the limelight. It's wiped out half of its rally from those recent interventions that we've reported by Japan and the U.S. Does that mean that we might be heading for further intervention, and how meaningful is that?
Well, yeah, we shall see whether there's another intervention to come. But certainly you get this one moment, the intervention which gives the yen quite a big boost. That then hasn't been sustained because the fundamentals are not there for it to be sustained. So the attractions for bringing the yen lower remain pretty good for most traders. The carry trade is still pretty strong. Volatility is low. The interest rate differentials, all these things are kind of working in the favor of a weaker yen. And to really turn those things round, what you would need is the Bank of Japan making a quicker move, the intervention, and then the BOJ raising rates, relatively close to each other, or at least changing the path going forward. That would both of those things may well help. But then beyond that as well, you need oil prices to come down a bit. You need US inflation to cool a little bit. You need the AI story to hold up. All of these things that are somewhat beyond the control of Japan. So it's a complex picture, but at the moment, everything is still pointing towards the end going down because everything has moved back to thinking about the fundamentals.
Okay, and Sam, finally, gold. We got to talk about that. It's advancing towards a 2-month high, $4,400 an ounce. This is ahead of that U.S. inflation report that you were talking about. Are we getting any kind of clues as to the Federal Reserve's appetite for a rate hike?
A little bit over the course of the past week. I think you're going to hear much more from the Fed after the previous meeting, and much more kind of solid guidance for the market to take. We've had a couple of speakers come out and again, kind of get across the point that inflation is key, and they are really focused on getting inflation under control. But gold, is still, in some respects, trading in a way that's, if you go back a couple of years, completely out of step with its traditional view. And so, yes, gold is kind of going up a little bit, but you are, as I mentioned earlier, in these kinds of markets where you're getting some sort of isolated moves happen. Some of this has been driven by oil and by the Fed, but you are getting maybe a little bit more volatility overall in the day-to-day moves than you might otherwise have.
All right, Sam, we're going to have to leave it there. Bloomberg's Markets Today editor, Sam Unstead. Now, before we head to the end of our show today, a quick look at equity benchmarks where they're sitting. Everything is pretty much in the green. We're taking a look at S&P futures, 1/10 higher, NASDAQ 100, 3/10 higher, and Dow Jones is also gaining. Euro Stoxx 50 futures not really doing much. Oil prices moderating despite that escalation in the Middle East. But that is it for Horizons Middle East and Africa today. Stay with us for Daybreak Europe. This is Bloomberg.